Hello traders and welcome to another video review. Today is Thursday, October 30th, 2025. Let's take a look at the Forex economic calendar for today. So what do we have here? Overnight data were quite, well, maybe not important, but quite well. We got the Bank of Japan intraday decision, the major event. And as expected, Bank of Japan left the interest rate at the level of 0.50%. New Zealand data in form of the business confidence improved from 49.6 to 58.1. Now we are waiting for the data from the Eurozone in form of the French GDP and French consumer spending. Those data are scheduled for is at 7:30. We are waiting for the press conference, Bank of Japan press conference, scheduled for release at 7:30. Then we got data from the Switzerland COF leading indicators at 9 o'clock. At the same time, Spanish CPI. At 9:55, we got German unemployment change and unemployment rate. German GDP is the major event of the London session. This data is scheduled for release at 10 o'clock. 1 hour later, we got the GDP from the Eurozone and the Eurozone unemployment rate. During the US session, we got a major release at noon, new home sales are scheduled for release at this time. Then we got the GDP from the US scheduled for release at 1:30, and then we have the German CPI scheduled for release at 2 o'clock. Another very important data release is the ECB interest rate decision. Interest rate decision is scheduled for release at 2:15, together with the deposit facility rate and the monetary policy statement. At 2:45, we got the ECB press conference, and then we got some speeches from the ECB President Christine Lagarde at 4:15. And the Fed's balance sheet release at 9:30 is the end of the day. So as you can see, we got two major central banks interest rate decisions. The first one was already Bank of Japan. The other one is now the European Central Bank. Please remember, yesterday we got the Fed interest rate decision cut from 4.25 to 4.0. So without any further ado, let's switch to the charts. We start with euro dollar. Euro dollar 4-hour time frame chart is showing us a movement to the upside, and even yesterday's interest rate decision didn't actually push the rate below 1.1577. This is still the major technical support. Widespread red candle has been produced. Obviously, however, right now the market is back towards the 100 periods moving average, and we stay inside the range as the market participants expect the European Central Bank interest rate decision. The RSI is roughly at the level of 50, so we are back towards the neutral level as nothing happens. So I guess that when the market will digest all of this data, then the major move might be triggered. British pound, as we expected, hit the level exactly as projected. So 1.3142 has been hit. Now we have a potential for the wave Z to be completed. We missed at least that's the first projection because it's a technical support, and there's a second one. This is 1.3125. So we missed this by merely 15 pips. Extremely oversold market conditions might favor some sort of the pullback higher. Nevertheless, the pullback higher might be limited towards 1.3252. However, again, this whole structure, it's a complex corrective structure, might be completed just yet. We need to see what the market participants wants to do right now. So for now, some kind of a bounce is expected. Nevertheless, this is not actually something major. Right now, we need to see what will happen. Anyway. US dollar versus the Japanese yen 4-hour time frame chart is showing us a strength. The market might be going towards the 153.28. As you can see, the gap is still not filled, and this is good situation for the bulls on the US dollar versus the Japanese yen market, because we might see some sort of the breakout soon above this high, and then the hit of 154.82. This is the next target for the bulls. In that situation, momentum is strong, momentum is positive in favor of the bulls. Now let's take a look at gold, and we can see that after yesterday's interest rate decision by Fed, the gold doesn't actually looks very happy. We come back from the lows of 3,888 towards 4,029, and then we moved lower yet again. So right now we are below the level of 4,000 again, below 100 previous moving average on a 4-hour time frame chart, and we are penetrating lower levels. Please notice that this movement to the downside is the major correction, and it's over 10% already, and it still might be deeper. So for now, there is no indication of this correction to be completed or terminated, and there's no indication of a uptrend continuation yet on gold. So for now, we are waiting for the trigger to see what will happen here. S&P 500, after the yesterday's interest rate decision, opened gap up above the 6,764. So now this level will be the technical support. Next target 7,000 points on S&P 500. As you can see, even if we switch to daily, you can clearly see that we are moving up, 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 up. There is no stop, no pause for this market. Relentless uptrend is being continued. No indication of any kind of a market reversal just yet on the S&P 500 as well. And last but not least, let's take a look at the Bitcoin. Maybe we will go to the 4-hour time frame chart. Well, another attempt to test the supply zone has been rejected. As you can see, we now went back towards this very interesting zone of technical support: 107,386, 8,600, and the market is trying to bounce a little bit higher after the RSI dipped towards the level of 35 points. We are 5 points only from the extremely oversold market conditions. There is still some room to the downside if the bears wants to continue this. There is still some room to the downside here on the momentum if the momentum wants to go even lower. So let me just change the color of this recent local high to red, so we know now that this is the technical resistance. I'm just wondering whether we shouldn't get one more line here. I think it would be a good idea to place one more line here, because it looks like these levels are being penetrated. These levels are being recognized by the market. So I think there will be some sort of the little bit wider. This is the supply zone. Let me just move it if I can. There you go. So this supply zone, of course, supposed to be moved a little bit lower, and now we have it like this. And there was one more level here, because there was 4 line. So let me just place one more line here. That was roughly around this level. So now the zone is now correct, so we can basically make it thicker or something like this, and there you go. So this is our new supply zone. It's even a little bit bigger than it used to be. Nevertheless, the whole idea is that only a breakout above this zone might open the road towards the all-time high at 126,217. Otherwise, the outlook remains sideways to bearish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.